Good afternoon, everybody. Welcome to Wise Tech for Wise Money. I'm Gary Wayne, founder of A1 Solutions International. Today's episode is titled AI-Powered Investment Intelligence, the Allermuir Capital Story. At A1 Solutions, we work with founders, leaders, teams, and financial service businesses to improve efficiency, scale intelligently, and grow through smarter use of AI, technology, and operational strategy. Today, I'm joined by Andrew Birrell, CEO and co-founder of Allermuir Capital, a London-based investment intelligence company serving venture capital firms, private equity funds, hedge funds, and family offices. Allermuir has built a proprietary AI platform called Hebrides AI, designed to automate and enhance institutional investment workflows across both private and public markets, from deal screening and data extraction through to valuation, risk analysis, due diligence, and portfolio monitoring. Allermuir's mission is to give investors better intelligence, better structure, better speed, better decision frameworks. Today, we'll explore what AI-driven investment intelligence really means in practice, how institutional investment workflows are changing, how private and public markets are being transformed by automation, how Allermuir Capital is building next-generation investment infrastructure. Andrew, welcome to today's show, Wise Tech for Wise Money. Before we go any further, it would be a good idea for you to give us a little bit of history, how you came to be where you are, how you started the business, etc.
Thank you very much for having me. Great to be talking to you. So I guess as a background, myself and my co-founder worked in investment banking, Morgan Stanley here in London, where we founded Allermuir Capital a little bit later on. We worked together in a couple of different areas, but ultimately in large-scale financial modeling and analyzing investments and then portfolio monitoring. And I think what we kind of came to the same, we were seeing slightly different problems at different parts of the investment lifecycle, but coming to the similar conclusion, which was that by increasing the amount of statistical, mathematical, and ultimately automation within our work, we would get to a better result. We'd be able to get more deals analyzed, be much more efficient within the transaction itself. And so we were both trying to increase the level of automation in both of our particular workflows, myself in looking at new deals and her in monitoring and analyzing existing transactions that the bank was already involved in. And so with that, we ultimately tried to bring about the use of machine learning to start to conduct more and more of the sort of financial forecasting work. I think we were seeing how effective that was in being a far more accurate tool because of its ability to incorporate much more data and be completely unbiased. And also there's a nice effect when you're looking at such large transactions as we were, that you could, set the model to start, analyzing a new head off to, get dinner or whatever it may be and come back and it has the answer for you rather than you sitting there and typing away. So there's a number of benefits. And so we left and started Allermuir Capital in 2021 to really expand upon that thesis of using machine learning and AI to evaluate investments, both when you first receive the information and later on when you actually hold, much more of the cards when you're monitoring a transaction you're already involved in.
Tell me a little bit more about your partner. Obviously, she's not on here today.
Yeah, so my co-founder, Anu Pohani, so a very experienced financial professional, originally from New York, has worked at a number of institutions from First Boston and Goldman Sachs and has worked sort of both sides of the pond. So she's been a great partner of mine in building up this business and someone with a wealth of experience in a couple of different areas, but all within sort of institutional finance.
So if you were for our listeners' benefit, if you were to summarize the problems you see in traditional investment and the problems you solve, could you sort of quantify it?
Yeah, so I think it starts from we don't use the information we have very well. So we tend to hold a lot of data within systems and data management, whatever it may be, in our experiences as well, deals we've done in the past or looked at. And all the information tends to just sit there. And then we hope to recall it from our memories as accurately as possible. And the reality is we don't, as people, we don't tend to do that very well. So starting from that, the ability to actually recall that information accurately, what actually happened, how good or bad was it? It's not sort of your perception of it. And then also, frankly, the time component, right? The ability to go and do in-depth, diligent work is highly time consuming and ultimately very expensive. But if you don't do it, you probably don't understand the risks you are taking. In any investment, we all kind of have an idea of what the upside looks like of, oh, I could make this amount of money, it could be a great return for me, this could be fantastic. But we rarely really know the risk that we're taking unless we really get into the detail. And even then, we might still be a little bit short. So, what we were really trying to solve for was a way that you can analyze the situation quickly enough and therefore understand your risks much more effectively within an amount of time, which means that you've made the decision informed by those risks rather than a decision where you're kind of having to hedge your bets. And unfortunately, sometimes that means you overestimate the risk and you don't take a deal when maybe you should, because actually the risks aren't as bad as you thought. B, you end up getting involved in a deal that in hindsight, one of those risks that you weren't quite aware of starts to flare up. You wish you hadn't got involved in it at all.
Why AI rather than traditional analytics?
So I think AI, like anything, I suppose, is an evolution of underlying mathematical and statistical work and our ability to automate a lot of these tasks. In any case, it really depends on the model and the architecture for the task. So if you're completing something, which I think many of us, many of the listeners as well, will have used some of the publicly available LLMs to put in documents or research and pull out highlights and pull the information through and much more advanced versions than that. But those systems are very effective when what you're asking for is is you're sort of searching for context and then it can provide a response to your specific question. That's excellent. But if we're looking to complete a much more financial task, which usually means mathematical, if you're doing financial modeling, if you're doing independent forecasting, if you're starting to look at valuation and risk work, if you start to get into much more maybe almost accounting type work where you're sort of looking at balance sheets and probability of defaults and LGD type calculations. Ultimately, that has much more statistical framework. So you want to be using an architecture which is very, very effective at doing so. So we end up using a variety of machine learning structures for those specific tasks. And in that case, they probably look more like the statistical models that have been used in the recent past. They're just an evolution of it in terms of the amount of data they can contain, but also their ability to map relationships within the same time period, but also over time. So to be able to say, sort of a cyclical nature of what was happening 12 months ago, and is that relevant framework for today, or should I ignore that, etc. And also to adapt. So not just to say, if I'm looking at two different companies that have a totally different history, what is the information that I can pass across? What is the information I should ignore? And also, why so? What is the trigger for that? Is it the industry type? Is it the geography they're involved in? Is it what they do? Is it the fact that their operational structure is slightly different or has a particular unique element, whatever may be the case? So it is more effective in adapting to those environments rather than a traditional statistical model, which is a little bit more 2D in its calculations. So it's kind of including everything or excluding it rather than adapting around that situation more effectively.
How does an institution actually get access to this?
Well, so there's a variety of layers to this, I suppose. There's a number, and I'd say this is happening more on the buy side than the sell side. So it's happening more in private equity and predominantly in hedge funds, I guess, traditionally, having started from high frequency, is building some of their own structures in-house. working with expert firms on the outside to build custom solutions, which is something we do a little bit of with firms. And then now, increasingly, probably over the last maybe 12 to 24 months, there is an increasing number of platforms like ours where you can plug in, work the way that you want to work, but you're getting the benefits, the underlying benefits of utilizing, AI generally. But if that's LLMs, is that LSTM architecture? So there's a number of different sort of ways that you can plug into it. The truth is, when it comes to institutional finance, we're seeing a slow adoption. People are using Copilot if they're already plugged into Windows. Maybe they're using ChatGPT. There's a few cases of people creating prompts and workflow structures with Gemini and Claude. But at the moment, we're kind of scratching the surface, particularly when it comes to broad institutional finance. There has not been a large-scale adoption yet.
But when you say evaluates a deal, can you give me an example of what that deal would look like?
Yeah, sure. We can cover on both sides, maybe public and private. So if we take the public side to begin with, we can obviously collect within all information regarding that deal from the information available out there. In doing so, conduct all the analysis we could want independently. In our own assessment, we may wish to compare that to what the consensus view is out there, or to see the distribution of views and also market positioning. But all of those, from the data collection standpoint to independent assessment, as well as then evaluating it, can all be conducted entirely by AI structures, not necessarily one end-to-end sort of behemoth, but actually by intelligently connecting specific sort of coding structures and then AI agents. You could evaluate all the investments and then provide it with a structure which is, how do you want to invest personally? What is it that you're looking for, either from the underlying investments, the portfolio, sort of portfolio as a whole? So, more of a portfolio construction and optimization question. So there's so many different elements, but you would be able nowadays to look at an investment, say, what do I think is going to happen to revenue and net income going forward? What does that mean for price? What is my sort of market positioning and risk? What does that sort of connect into? What does that mean for expected return and distribution? How do I want to connect that in with my existing positions, or do I want to have a sort of clean slate? What would my new target portfolio be? What would the weights be as a result? Are all items that be conducted entirely both by AI as a fundamental assessment and created in a standalone structure. On the private side, obviously, by the nature of how the deals are found and negotiated, there's a more of a human experience, I suppose, in that you only get access to certain deals by connection and reputation, and occasionally by luck in terms of what falls across your desk. But from that point onwards, and also in the search for those transactions, you can now start to connect AI systems up in terms of pulling through, teasers and IMs to collect a database that connects with publicly available information. You can start to do the work independently to evaluate the management team, the market, how good is the product from a technical standpoint, how effective is it, and what does that look like within the sort of global marketplace, as well as then being able to produce independent financial models, put together investment committee memos. There's a number of AI solutions now for conducting legal diligence and putting together documentation. So previously, the work, I suppose, of accounting firms, of Big Four, as well as legal firms to complete all the sort of mandatory documentation. A lot of that can now be conducted by AI systems, and then on an ongoing basis, right? You've now invested in that transaction. You now need to, the fruits need to be born, I suppose, as a result of that. And so, how do you monitor that transaction? The data is already in the system. You're going to receive piecemeal data on a monthly or quarterly basis, most likely. And you can now incorporate that information and have the system continuously re-underwrite. So from our previous days in investment banking, you're not really re-underwriting end to end, because that's a very time-consuming and costly process. But nowadays, you can just piecemeal add in new information, and it'll update everything as a result. So everything you would have done, from a legal review to financial modeling to evaluating market, etc., can all be done effectively from scratch each time. And then to see how that performance is adjusting over time. Is it missing KPIs? Is it outperforming? And that will probably be a combination. It'll be outperforming in some, maybe underperforming in others. What does the pathway look like? How does the story that's being told by management sort of compete with maybe the harsh reality of the world that's out there? I mean, if you're investing in earlier stage companies, most are going to fail. So there's going to, at some point, be a reality check of sorts from their original expectations and why you invested. So all these things will be continuously adjusted. And we now live in a world whereby you can wake up in the morning and look at your dashboard and see exactly how your private companies are performing and likely being adjusted by what's happening in the public space. So as news flow comes in, as we see, public market financial reports, right, coming in, if you're a tech company and Apple releases X, there may well be information in there which may offer a hint as to where performance might be going, and it might be tiny. It might be 0.01%, but that information continues to add up that allows you to perhaps have a continuous evolution in your understanding of what's driving business performance and therefore your investments attached to them.
Is this does this fall under the guise of Hebrides AI, or is that a different system?
No, both of those are basically part of our Hebrides AI system. So Allermuir, I grew up in Scotland. My family is all from there, and so Allermuir is a hill in the Pentlands south of Edinburgh, and obviously the Hebrides Islands off the coast of the west coast of Scotland. So that's where those names came from. So Hebrides as a concept for us underpins the fact that although part of one sort of chain, they're all separate segments that have their own unique element. So the way that people can interact with this system is there is a core technology which is consistent, but within that, the way you use that and what you ask of it and the way it will work will be dynamic around you. So ultimately, you have even though everyone could use the same system and end up with a slightly different result. And that is true of any investment. You and I could both look at the same company and say, I want to invest or I don't, for perfectly reasonable assumptions and or decisions. So that's what really we're trying to get to, is offering that structure whereby everyone has all the information available and it's then about the decisions that they make, rather than making a decision based ultimately on lack of information or lack of the time to conduct the analysis to make that informed decision.
Does this cover new issues as well, like IPOs, pre-IPOs, new issue bonds, etc.?
So we definitely do work in private credit. We haven't to date done sort of IPOs and direct new issues. So our system hasn't been explicitly designed, or we haven't added in the data within that framework. Can we analyze those transactions from a fundamental view and provide that sort of valuation and risk work? Absolutely. But what we find is there's always additional technical elements that come around that sort of IPO and issuance moments in time that we haven't spent the time to design a specific AI system around yet. So that's just something that hasn't yet been on the cards as we've developed out these underlying systems that form part of the overall Hebrides structure.
Private markets are historically slow, fragmented and manual. This, the Hebrides AI, is that particularly good for private markets?
Yeah, I think we definitely see the biggest growth element within private market segment for a variety of reasons. So when we started, our intention obviously is to be more accurate in how we assess business performance. But as we can connect across all these different structures, we get quotes from clients that they're saving 50% of their time now as a result of using the platform. So they're able to take that very initial deal information, immediately screen the transaction. Is this for me? What's the performance look like? What questions do I need to ask management? What's missing? They can be done within 30 minutes on screening a transaction, yes or no. Or it could be less. You can actually create automated structures within our platform to evaluate the investment for you. And then throughout diligence, it can take on a huge amount of workload in terms of being able to crawl through all the data, all the legal documentation, being able to build out the financial modeling that has all those sort of pieces of information consolidated within it, and then being able to conduct those sort of approval memos, why you should, why you shouldn't take a transaction, what the range looks like, if you make a decision, why, what the caveats are, and then to assist a little bit during close. We're obviously not it's not a legal platform. So if you need to sort of get the transaction closed, but then once you've invested in it, being able to monitor that transaction throughout the lifetime. So being able to continuously reevaluate, being able to continuously understand the risks, being able to see what's good, what's bad, what you need to get involved in is exactly what the platform's for. And there's also one tiny other little element, which is once that information is there, if you invested in it and sold, or you passed on the deal, whatever may be the case, that data is still in the system and can now be used as a data source, right? That information was shared with you, and you can now use that information, particularly where things went well or went badly. And that information can be incorporated into how you evaluate transactions going forward. It's about bringing elements of that experience as an investor. So, well, actually, I've seen parts of that before. This is what went well. This is what went badly. But it's actually in the cold light of day. It's in a very sort of systematic manner. So, throughout the life cycle, and then circling back into, I've had this experience on a transaction. How can I learn from that for my next one? Are all elements that are part of the Hebrides system.
To get the data, do you have to be plugged into any data sources, or does that sort of come from via you guys?
Yeah, so as a combination, we pull information directly. We also work with a number of data providers. It's really a combination of. Frankly, there is a lot of information available publicly on private companies, not necessarily, financial statements, although that's true for Companies House and things like that, or those issuing public debt but don't issue public equity. There's information that can be contained within there. So that's all stuff that gets pulled into our system. So we work with a combination of, the important thing when we receive information is how you clean it, incorporate it. How do you match up items? What does it mean to say that you perform, you were able to achieve X in a certain environment, based on what information? And what information did you have at the time to make that decision? But also at the same time, in hindsight, what was there something that was missed? So the data is a huge element. So we do a combination of direct and data providers.
Okay, I mean, you also operate with public markets, as you said earlier, obviously hedge funds and the like. Does your platform work better in liquid markets, or it doesn't make any difference?
I think it just depends on how you want to invest. So by its nature, it has it has a combination of technical structures and fundamental analytical structures. So you can use it for both. It's highly effective at 1 day forward, so for entry or exit signals. It's very, very effective. We're also very, very good at sort of longer term, 3-6 month signals that are very fundamentally fundamental analysis based. So there's a combination of, and you can structure those together, generate very high alpha, or optimize a portfolio accordingly, utilizing those signals. So there's actually strengths across the board. I think it's always about being honest in evaluating your system to say, what am I good at? What am I not quite as good at? We're not going to be great at that sort of maybe 1 month time frame, particularly when a fundamental assessment, because there's too much news flow. Whereas if you say, well, through an earnings cycle, as that sort of information comes out about how accurate you actually are on business performance, that's something we can do very, very well. And similarly, we can do a high degree of confidence regarding a sort of technical analysis signal in the relatively short term. So we can do a combination of those items, which is, how do I enter or exit this position? But I've chosen to make it based on a fundamental signal that has a slightly longer term view.
There's a lot of noise, obviously, around AI and finance. I mean, where does it still need human intervention, and where does it not?
So when you start to, I've obviously been involved in building AI systems for a while now, is that actually in doing so, there is a lot of human decisions that are made about how something is built. And so that flows through continuously. So for instance, in the way our system is built, we don't incorporate sentiment type information. So we're not scrolling through live Twitter feeds, for instance, as a way to try and find alpha, because what we're trying to do is to evaluate how our businesses will actually perform. And we feel that the further value of that coming through is far more noise, and maybe you get a bump intraday, but that's not what we're trying. That's not what our expertise are in. So the really what we're trying to structure with any of these things, or where you want to put people in the process, is how do you want to influence the structure of something? If you're using a platform, the way that platform or the way that AI system behaves will be based around the person that designed it. They will have made decisions ultimately that have changed the way it will respond to somebody else. And then similarly, I think many would consider that they don't, particularly for long-term investment decisions, they don't want AI to click the button on the trade. They want the AI to present them with their options or present them with the target portfolio and give them all the reasons why or why not. And that's a big point for us. So we've designed our system around what we refer to broadly sort of data integrity, which is to say, here's the final answer. And at each stage, walk back, here's my calculation to come to that, here's my reasoning, here's the sources of the data. And you can sort of just walk back through and say, okay, does that number make sense to me? Is that right? Is that wrong? Because the reality is, the way we think of AI for us is it's like having an excellent employee for you. Now, when you first hire that employee, your level of trust in it is lower. And you review their work very, very closely to ensure it for accuracy of the data they used and the work that they did, to then over time become comfortable that they are highly consistent and are able to present that information directly and very, very appropriately and use the methodologies that you want to do. So that's what we're trying to aim for, is that there will never be a system that is 100% accurate. It's not feasibly possible to do so. But what we can ensure, or to the best of our ability, is to present all of our workings. If we kind of go back to, when you first start, doing maths and you get marked down for the right answer but not providing the workings, we're trying to provide all the workings so that the teacher can actually check our answer properly. And people need that more than anything else, because it's not good enough to say, well, the AI is great, so it must be right. And it'll be right most of the time. As true as that is, if we can provide the proof in all cases, then it will build trust for people over time. And also that it may well raise that 1 or 2% chance that there's an error, because that will always be the case, as it is with a person.
When we talk about the hedge funds and the VCs, etc., they're quite cautious by nature. How are you overcoming that sort of barrier?
So it's really interesting, I think, just to see how people are tackling the incorporation of AI. When we first started, the conversation was, I don't believe that AI can do this. And then ChatGPT happened, and that changed the conversation for people, because they were sort of immediately aware of how effective AI could be in different areas. And so that question evolved. We're still in that phase where people are sort of saying, we're still getting to the point where people are saying, this is how I want AI to work for me. And there's ranges of how realistic that is. At times, people want an AI system which can do far more than AI is currently capable of. I think people have sort of jumped of, well, AI can do everything. Well, that's not technically true. There are things it can do well, there are things it can do badly, and there are things it can't do at all. So we're in that phase right now where people are figuring out how they are going to incorporate AI from the things that they know, and also investigating and finding out what the options are. And what we'll see is that as much as people are a little bit risk off, it's mostly in that they don't, is having that trust that they can rely on the outputs from the system, particularly if there's any element of a black box situation where they're uploading data somewhere, they ask a question, they get an answer. Without going back to the original materials, can I trust that information is correct? And so that's the biggest element, really, that is the challenge. And frankly, I think most people don't want the AI to make an investment decision for them. It may well be true that they're happy for it to make a decision within the parameters that they set and constructing their portfolio accordingly, but they don't want the AI to sort of make a totally independent decision for them. I think we're quite a long way off. And truthfully, I'm not sure that will long term ever be a particular benefit or the way that the market goes, because ultimately we want people to add in their experience elements. AI and machine learning is based on probabilities and statistical structures, so it doesn't necessarily consider, or it considers it, but it will always lean towards what is most likely. And at times you may want to do what's unlikely. There are a number of funds that are highly successful by being the tail option, by being the tail risk option, and sort of the out the money option. So I think we need to just consider that, as effective as AI may be, it's not to the replacement of people broadly. It's to the replacement of the person that's just telling you what the information already shows. There will always be value for people that are discerning that information and interpreting it in interesting and contrarian ways at times.
How is this sort of different from like trading systems? Because I remember back in the day when people had trading systems, and obviously people were this was before AI, and they were making money using those systems and listening to the messages and signals, and then they decided they'd incentivize their traders or investors by letting them use human intervention, and then suddenly human intervention messed up the whole analytical process, and they lost money as opposed to make money. I mean, how much do we lean on the system as opposed to human intervention?
I think increasingly it's a lot. I think I enjoy following F1 a little bit, and you think how much of the performance is on the car and not the driver. A lot, but the driver can make a difference, and a poor quality driver will show a big difference versus a good quality driver, and you do still need that person to maximize the situation, and that is true throughout. But yes, unfortunately, I think we see it all the time, right? In terms of about 70% of analysts underperform, that are inaccurate when it comes to what actually happens to business, to where the actual business performance ends up, right? So for 70%, they're not really adding an awful lot of value beyond what the company's forward guidance is already saying, and so we will see an evolution in that space where that involvement from a person is only, unfortunately, predominantly adding bias, not adding additional performance. And so we'll definitely see that evolution where the people that remain will be because they're adding value and experience and knowledge on top of what the AI is telling you. Sort of statistically, what is most likely to happen is then you get a person to be able to present that and make those tweaks accordingly. But to answer your sort of first question of how is this different, I think the truth is, from a machine learning trading system, it's an evolution of, it's more data running bigger calculations, and it's sort of a bigger engine based on the same concept. The AI piece where we're connecting it up, particularly when it comes to private markets, is what looks a little bit different, where it's covering both the language element from documentation and presentations and the approval process and reporting to LPs, alongside the quantitative elements of financial modeling and performance matrices and risk analytics, etc. So the evolution has been to bring so many different pieces together, and also hopefully not allow people to interfere with bias, which tends to happen earlier in the process. People are like, if I was to ask somebody, on the street what they think a great investment is, the chance of them telling me a good one is unlikely to beat the market. But if I give them if I present them with a range of options that are well analyzed, they are likely to be able to discern between them which ones are better and which ones are not. And so it's about finding, if we're using the best of technology in different ways and different analytical frameworks depending on the task, we should use people in that way too.
But looking forward, what does AI-driven investment intelligence look like in 5 to 10 years to you?
I think it looks at being, the way that we work will shift a little bit, in that rather than many firms taking in the data, and then looking to complete the analytics in-house as such, or to do sort of one-off situations, people will buy in core analytics that they then adjust. So we will go from a much of a leap from information to insightful and or knowledge-based sort of outputs, and using that, so it will accelerate the time to being able to make those decisions. That's really the big leap. So rather than it being data and news flow, it's about what does that actually mean. It's already been, when something comes out on Bloomberg, by the time it hits your system 3.5 milliseconds later, the impact on your portfolio is plus 20 million like underlying P&L and a change in financial cash flows by X. That's what it should mean for the investors that are sitting there managing risk.
If you had a magic wand and could change one thing about how capital markets operate today, what would that be?
I guess the big one is how long irrationality prevails. I wish that everyone was evaluating things on the facts presented to them. That would make my job an awful lot better, or a lot easier, I should say. But that would require removing the person, and I would never want to do that. I think what's so fascinating about sort of markets, public or private, is the combination of, I guess, the sort of mathematical reality and the human psychology element that's added on top.
If we, before we wrap up, maybe you should give us an overview of how one a hedge fund or a private investor or whatever wanted to use your services and systems, how they would actually, what's the process in getting on board?
Very kind. So the process can be incredibly quickly, particularly if it's private markets and utilizing our platform, or public markets and just wanting to receive trade insights. That's probably a 24-hour turnaround from first meeting, if that's where people want to go. All our information is available at our website, so at allermuircapital.com. They can also reach out to us over LinkedIn, and there's a few other platforms as well, but they're definitely the main ones. The turnaround time, particularly for those where we're building slightly more custom solutions, can be very quick. On the public market side, it's maybe 1 or 2 weeks to build custom investment strategies and trade signals for our clients. And then on the private market side, we may well build out slightly more unique structures that maybe take a couple months. Fundamentally, we end up working with clients from our first call. We're probably working together a month later, and start being able to save about 50% of their time. So we hope that we're able to work with more and more esteemed firms over time.
If listeners want to get hold of you, Andrew, how can they find you?
All the information is available at allermuircapital.com.
Well, I really enjoyed this. It's been quite an education. Obviously, the market's changing, and you're one of the main movers and shakers of that change. So it's very interesting to have you on here today. In closing, I just want to thank you for joining us today. I'm Gary Wayne, founder of A1 Solutions. You can find me on LinkedIn. You can find me on my webpage. And I look forward to the next episode. Thanks very much, Andrew.
Thank you.